Hello, everyone. Hope you're well. This is Jake Knotman with the Best in Property podcast. My guest today is one of the asset management directors from one of the largest build-to-rent owners in the UK right now. A company which I followed for quite some time. A company which I certainly follow their journey in terms of where they're heading. I think, like I said, I'm always interested to see what the best in the game are doing in many ways, and I definitely think my chat today is with someone who is leading the market in many ways. Yeah, it was just a great chat. Obviously, what this entity are doing day to day with PropTech, what they think on the future of build to rent. Today's podcast is with Jamie Snary from Apache Capital Partners. Enjoy.
Hello and welcome to the Best in Property podcast with Jake Knotman. The podcast where you get to access the best property leaders around the world. From the biggest developers in the UK to the largest property investors across the globe. We pick the brains and answer the questions you've always wanted to ask. Enjoy.
Jamie, thank you very much for coming on the Best in Property podcast. How is everything with you right now, and how is everything for business-wise?
Afternoon, Jake. Thanks very much for inviting me to talk to you today. Yeah, and I think obviously we live in very uncertain times at the moment, but we're very fortunate that the Apache business remains very resilient, and we're very fortunate to be in that secure financial position. Obviously, COVID has thrown up a whole raft of challenges to everyone who operates and lives in the UK at the moment. But we very much remain confident in the long-term outlook, certainly for what we are focused on as a business in terms of build to rent. I think everybody's certainly been using all these sort of online chats, Zoom, etc., more than they'd probably come across for the previous years before this kicked off in March. But all going very well so far.
Yeah, I mean, in terms of Apache itself, obviously, you guys are obviously one of the most recognised brands in terms of what you guys do in the UK. What sort of conversations, I know obviously in terms of position-wise, financially, you're quite strong, which is great to hear. What sort of conversations have you had to have in order for you to make sure that you do come out of this as strong as you can?
Well, I think, fundamentally, you sort of need to split that down into two aspects, because obviously one aspect is, in terms of investor and bank relationships. And obviously we've continued our, ongoing dialogue with all those parties throughout this crisis, because I think, in times like this, you've got to keep close to everybody involved in the process. Obviously we are, on site with a number of developments at this stage, as well as having operational schemes, obviously including our flagship Angel Gardens in Manchester. So it's really a question of splitting those 2 points down, investor banking relationships and communications with all those individuals are obviously critical. And then equally on the operational side of the business, which is what I focus on, particularly at Apache, making sure that obviously conversations are ongoing with all of our occupiers and residents across both our build-to-rent operational schemes and other assets that we own. I think we will see that fundamentally the build-to-rent sector is going to see an increase in renters. That was already set to increase in before the coronavirus. So I think the disruption that we're going to see at the moment, we'll probably see an increase in renters. Short-term spike in rental demand, if anything. Our strategy remains as it's always been, Jake, to acquire sites in the very best locations in the key regional cities across the UK for our build to rent joint venture with Moda.
For sure. I mean, having obviously looked at what you guys do in terms of the type of stock, the location wise, I mean, especially on the sort of the build to rent sort of side of things, you guys look for, great locations, of course, great investment. But in terms, obviously, with COVID and everything else that's going on, obviously you mentioned that you're going to try and stick to the strategy as clear as possible. But is there any changes at all in terms of strategy when you're looking for your next acquisition? Is it a case of maybe looking at alternative markets, which maybe tier 2 cities that you maybe didn't look at? Or is it a case of sticking to what you know, sticking to obviously what you guys are good at? Of course, I know you've got a wealth of experience across all sort of major cities and towns, of course. But
Is there any sort of changes that you're going to sort of divert in any way to a different type of sort of build-to-rent product, or is it sort of strictly sort of the city centre, the beautiful, the nice, and the sexy sort of types of schemes?
I think ultimately, Jake, in business, you got to play to your strengths. And what we've done jointly with Moda is obviously acquire some excellent located schemes across core regional cities. Obviously, Angel Gardens in Manchester is the first operational asset, but we're on site with our scheme in Liverpool or Lexington, which is part of the sort of Peel Holdings waterfront and directly opposite the new cruise liner terminal. We're on site in Birmingham with the Mercian, just opposite Brindley Place. We're obviously also on site in Leeds as part of a larger master planned scheme, which is owned by Caddick, with the Soyo scheme there. Well, we're already on site in Edinburgh with Springside, and we'll be on site later on at the tail end of this year with Glasgow. So we've got a lot to be going on with at the moment, but obviously we are continuing to look at acquiring other opportunities as they present themselves. The fundamentals will still be that the sites need to be within close proximity, 5 minutes of where people, work, live and play. So the core fundamentals we don't see changing as a result of COVID particularly.
For sure. In terms of Apache as sort of an entity, obviously you guys have grown well, doing extremely well over the last couple of years. And looking from your website, it states clearly that you are the third largest build-to-rent operator in the UK. Is there a sort of target? Is there a goal to become the number one, or are you quite happy with where you guys are right now?
Well, we're always looking to expand. The aim and ambition is obviously to be the leading, multifamily housing provider and operator with Moda in the UK. So we'll always be on the lookout to acquire other opportunities. We haven't set ourselves a specific target of having a certain number of units or certain, assets under management, particularly at a given point in time. But the strategy, is by buying quality located sites that we can then build and develop and operate, market leading assets.
For sure. And when it comes to that expansion, I mean, obviously you guys, from what I've looked at, you guys do a lot of new build stuff. Would you guys consider buying any sort of stabilised assets at any point? A case of a developer that has done a deal and obviously built it to PC. Would you guys step in at that point and buy it off them, or would you be looking from start to finish? Really, that's where you sort of suit best.
No, in terms of our business model, it's very much to acquire the land, take it through the planning process, and then obviously develop it and operate it for long-term income. That suits the return requirements of our investors. So we haven't tended to look at buying stabilised assets or portfolios. That's not to rule out that it's not something that we might consider in the future, but certainly at this juncture, it's very much the same operating model. Everything that we've previously developed across the student accommodation space, where we developed about 2,500 beds in a number of joint ventures over the last 10 years. With the exception of one asset, they were all development projects, which we then subsequently exited from. Just touching briefly on that, Paul Street East was a scheme that we sold to Greystar, Allianz and PSP last year, which had a market yield. And then the year before that, we exited Brunswick House in Cambridge, which was another direct let student scheme, which also set a market yield in terms of lowest yield for a direct let purpose-built student asset outside of London.
Okay, and in terms of when you exited on those schemes, it just sort of make financial sense to do that? Or was it a case of that was always the plan from day one, or is it a case you got the right off on the table to make the deal work?
No, they were in line with the original business plan. So each asset that we own, as we said, part of the original underwriting process, we have a business plan attached to each of those deals, which has obviously reached its maturity in the case of those two.
For sure. Nice to hear. Jamie, you're an experienced chap in the industry, sort of circa around 18 years, I believe. Asset management, I guess, is, even from my little experience in the industry, it's changing all the time in many ways across, I guess, the property sector in itself with technology and all that kind of stuff. So how have you seen asset management change over the last 18 years? And I guess, where do you see it sort of going in the future, I guess, with post-COVID?
Yeah, no, that's a good question, Jake. I guess there's probably two sort of real fundamental changes that have come to play across, asset management as a whole. I think it's difficult because various sectors have more implications than others. So in terms of what we do at Apache, obviously it's operational, it's residential led. Everything that we invest into is someone's home, whether that's a student's home in our student accommodation assets, or whether it's a senior living home in our senior schemes with Audley, or whether it's built to rent, whether that be a couple, a family, young professional, or downsizers in our built to rent venture with Moda. So I think from that perspective, technology, PropTech is probably the biggest change that's come in, really over the last 5 years. You've got to be flexible in terms of how you approach things. The relationship of the traditional relationship from, going back maybe 10, 15 years ago of landlord and tenant has long since gone. All our residents are our customers. If they're unhappy, fundamentally that impacts on value of the assets. If you've got happy residents and customers, you've got secure income streams and ultimately happy investors. I think the core fundamentals of openness and transparency and having that relationship with your residents has always been there, whether that's in a commercial setting, whether you're managing a multi-let industrial estate or office building, you've got to be visible, you've got to talk to your occupiers. Because in situations like we've had with COVID, some occupiers will struggle, and you've got to be available to have those discussions. You can't operate a portfolio sat behind your desk. You've got to be contactable.
For sure, no, massive agreement with that. In terms of PropTech itself, because PropTech, I guess more than anyone, Jamie, has grown massively over the years. Technologies here, there, and everywhere. Some are great, some aren't so great. In terms of Apache itself, PropTech is it's quite a generic sort of phrase, but what are you doing sort of internally to make sure that you are keeping up with technology and obviously the growth of it? Is it a case of you guys are getting your own sort of PropTech stuff and your own systems built for yourselves, or are you working with different third-party companies? How is, and if any, really, are you guys sort of looking into PropTech as a whole?
I think what we've done with Moda is obviously really form our own platform. So the application we use across the Moda portfolio is really quite bespoke, and that's been developed by utilising a number of products that are in the marketplace and then bringing those all together. So it's not been a question of going to an off-the-shelf provider and sort of going from one size fits all. It's been very much a bespoke developed product, which has worked really well, and the feedback that we've had from our residents has been very strong. And I think it's really in times like this where it comes into its fore, really, because you can communicate, at a distance. So where we've had social distancing measures put into play by the UK government, what we've been able to do very successfully is communicate with all our residents in terms of what we're doing, where we've got amenities that we've had to, either close or we've changed things that we originally would have hosted events on the 7th floor at Angel Gardens. We've changed the way that they were hosted to more online. To react to the government requirements. That's been fantastic because it's just been a very easy tool to communicate with. So I think PropTech absolutely is a very important part of what we do, not just on our build to rent space, but I think as an industry as a whole. I think the property industry has often been criticised for being a little bit sort of behind the times in terms of technology. And hopefully, the way that we're doing things and others in the space are also embracing, change, will be seen as a positive for the wider, image of the industry.
Mm-hmm. For sure. Well, as we know, PropTech is there to make things easier for people, more efficient. So I think if you can welcome it, it's and rather than going against it, I think it can help many businesses in many ways, and across obviously all property in itself, really. Apache, from what it seems, have built a really strong internal team. I'm a big believer in looking at who the sort of key players are within the sort of team and how they got to where they are. In terms of Apache sort of team itself, obviously, if you can give us a bit of background, obviously, sort of the team, the different roles that you guys have there. And in terms of your opinion as well on sort of creating a good team and creating a good culture, what are your sort of key things that you look for when, I guess, joining the team or wanting to build a team? And what do you think Apache have done well on that side of things?
That's good. Another good question, Jake. I think what we've done, really very well is we've got a very agile, nimble business, and we're sort of 20 strong in the office. Each sector of the business, whether that's on the sort of financial or the analysis side or the asset management side or the development side, everybody has got their own specialisms and strengths, but obviously very much a deal-driven business, certainly at the front end. We'll work together as a team, and everyone knows what they've got to do on a certain transaction. And then, obviously we're all in the same office, so it's very fluid discussion, and that's really the same ethos that we've rolled out whilst we've all been having to work remotely through Zoom, etc. So everyone knows what they've got to do over a given period of time to get a deal closed. Obviously, we've got the sort of process goes through effectively the DD on the way through acquisition. We then obviously manage all our external parties through the development process, and then obviously the same on the operational side. So I guess in summary, everyone has got their own key core specialities, it's about being fleet of foot really in a business, and what we've seen, tested out over the last few weeks is that you've got to be a fleet business in these times.
Mm-hmm. Definitely agree. I mean, the amount of people, developers I've spoken to, or large investors that I've known for many years, who could never get on a Zoom call, and they're coming on, they're using technology now more than ever, and it's it's quite interesting. And like I said, I appreciate your points on the culture of the team, because I think having that core team is massively important, especially when you're dealing sort of the deal sizes that you guys are looking at. I think it's not a case of it's 5 to 10 grand here and there. It's you've got to make sure that the team that are looking at and reviewing the deals have, of course, are bought into the vision and are sharp at what they do.
Jake, I think what we've got a great culture of the business. Everyone works very hard, but equally, we have a lot of fun along the way.
For sure. Well, I think it's, I guess in property, yourself, it's the culture, what it offers, sort of the after work time. It's enjoyable. I think I've witnessed that traveling to London, going around the world and experiencing that. And I think the culture within different businesses, and you can see it straight away from a business that's got a great culture and that probably hasn't got a great culture. I think having that, especially because property is stressful. It's not an easy job in many ways. People just think it's selling property or it's buying property. It's really not. It's you constantly problem solve, and I think having that strong culture allows you to solve those problems a lot more easier than if you have a bad culture. So no, I appreciate that those words on that. Jamie, in terms of, obviously, I guess products itself, in terms of markets across the UK. Having personally lived in Manchester all my life, and obviously I've been seeing Manchester market the way it's gone, I think Angel Gardens is an amazing scheme, and I think where, I guess, the whole sort of Manchester market's gone, well, to where it needs to be, really. I think Manchester has deserved this for quite a long time, but a lot of people now sort of starting to say that the rents have massively increased. Some of the tenants aren't going to be able to afford the rent. What do you think, in terms of why do you think people are saying that? Of course, there's obviously, I understand the reasons why from my side, that the rents have to be a certain amount, especially if you're holding an asset. But where do you think that's going to head with, obviously, COVID going on, with people not even being able to afford the rent itself? Where do you think the sort of high rents are going to go? Are they going to have to drop? Or do you think the rents are going to stay the same across the board?
Well, I think it's probably too early to say at this stage, Jake, as to whether we'll see any adjustment to rents at this stage. Specifically coming out of COVID. As I said earlier, I think we'll probably see an increased demand, if anything, because of the sort of unsettling nature, and more people generally will be looking to rent rather than buy. In this, as we come out of COVID, because obviously house prices, no one knows particularly where they may end up. So I don't think we're going to see a downturn in demand. If anything, I suspect we'll see certainly a spike in the short term. I think in terms of rental levels, we've obviously positioned Angel Gardens, at the upper quartile of the market, but we have seen very healthy demand since we released the first apartments into the market in October last year, and have hit, and in many instances exceeded our underwrite in terms of the rental levels. So we're very pleased with that. I think in terms of your question as to where are the sort of rents too high in Manchester, I think ultimately it's a question of supply and demand, isn't it? And provided you've got a product that is market leading, and then the service that your customers are getting is likewise, we see that as very sustainable.
For sure, definitely. I think it's. I think what you guys, as well as Modo, have done extremely well is, you've got to give that experience to the tenant. And I think people, it is all about supply and demand. And I think it's all about creating that demand. And of course, if there is a demand for it, then it's not going to be a problem, is it? So, no, I appreciate that. In terms of asset classes in itself, in terms of, you've got industrial, you've got retail, you've got resi, of course, and commercial. Where, in terms of with COVID going on, in terms of from Apache side of things, what are your opinions of what sort of asset class do you think is going to come out the strongest of this? And obviously, people have got mixed opinions, of course, of different asset classes on what's going to go first, where prices are going to drop, where prices are going to increase. Where do you think, which asset class do you think is going to come out the strongest from post-COVID?
Well, you could argue, I would always say this, but I think, where we're positioned as a business, build to rent, due to the fact there's obviously a chronic undersupply, rising demand, lack of a quality product, and already a projected long-term growth in rental demand, we see that's very well positioned to come out of the crisis, stronger than it went in, if anything. And I think that by the fact that we've obviously naturally seen across the UK an increase in home working, where we've got, large areas of amenities, dedicated amenity space across all of our schemes with Moda, we see ourselves, even within the build to rent, sub-market, very, very well positioned, because I think there will be a natural shift of people working at home and in co-working environments. And if you've got those two side by side within the same building, naturally people are going to want to live in those sorts of schemes. I think probably senior living is also reasonably well positioned to weather the storm well in the long term. I guess the areas where probably more exposed, retail and high streets. Obviously, the retail market has had some fairly large headwinds for many years. I suspect that unfortunately, COVID is going to be the nail in the coffin for some of those operators that have had challenges in the past few years.
For sure. I mean, I was speaking to a developer the other day, and they were thinking of bringing a build to rent product to the market. They said there is no way. I mean, there's no chance really of you succeeding in the build to rent market if you can't compete with the product that's in the market already. I mean, in terms of, like you said, I think build to rent offers great value for the investors that are, of course, are in build to rent, of course, as well as the tenants as well. And I think when you have got that tenant, when you have got that demand from tenants, they expect the best of the best. And I think if you're going to come in trying to do it half-heartedly, cut costs, it's just not going to work. And I think those are the products that are going to get left behind. And it's like, Jamie, in sort of, I guess, the market now, as soon as a new sort of multi-rent scheme is built next door, tenants want to get interested in that. They want to move to that. So keeping up with the demand, keeping up with the sort of the quality rate that's needed, I think is massively important for, I guess, post-COVID rate. But something that I've been personally interested in as well, Jamie, and a few of the listeners, a few sort of peers that I've spoken to prior to today, I've always wanted to, I guess, understand sort of day-to-day wise, as sort of an asset management director, I guess with Apache, obviously with that, what does your day-to-day look like? Is it a case of relationship building? Is it a case of, I don't know, some people who work in finance, for example, or sort of reading reports all day and all that kind of stuff? What's your day-to-day look like on a week-to-week basis as well?
Well, I think one of the things that I've always liked about asset management is that no 2 days are ever the same. You never know what's going to land in your inbox. And I think more so than ever, that's been the case over the last few weeks. So yeah, no 2 days are ever the same. I think, to succeed in asset management, you've got to understand the holistic sort of life cycle of assets. You've got to understand about development. You've got to understand about investment. You've got to understand about, property management. You've got to understand about the accounting. You've got to understand about everything, which is one of the, sort of key things that attracted me to join the Apache business just over 6.5 years ago, that you are involved in every single aspect of the deal, whether that's on, looking at the underwrite on the way in and operational costs, etc., or technical due diligence, to all the way through to running the disposals when an asset's come to the disposal stage. So yeah, it's fascinating. It's about having building relationships, both with investors, joint venture partners, and our occupiers. So I guess it's a variety of what the challenges are that are thrown up on a day-to-day basis. In short.
For sure, and I think that's why I love property so much as well. It's there's obviously, it gives you many different types of stress, but it's there's I guess different conversations all the time with interesting people, different sort of investors, like you said, all around the world. And I think for me, I enjoy working with those different types of individuals. Interesting to see how they sort of operate as well.
Yeah, no, I think it's a people business. At the end of the day, you've got to be able to form relationships and get on with people. You've got to be approachable. But equally in an asset management role, you've got to have a bit of structure in terms of how you operate things and want things done. And being organised is another sort of key attribute, I would say.
For sure, yeah, definitely. Well, I guess when you sort of dealing with sort of large sums of capital as well, it's the sort of the basics and the structure has to be built efficiently, doesn't it? I think if you're going to raise X amount of money from a family office in Dubai or wherever it is, then you've got to make sure that you know your numbers and you've got obviously you're sharp as anything on all the products. So, in terms of something which I've seen as well, and I don't know if Apache have looked into it at all. I've seen a few different funds that I've worked with, well, around the world really as well. They've started to dip the toe into modular. What is your sort of, I guess, personal opinion and Apache's opinion on modular? And is it something that you guys are looking at sort of in the near future?
Yeah, no, it's a topical question. I mean, I think obviously, as you know, all our current projects are traditional build, largely because obviously where they're located in city centres, concrete frame principally is the only real option for a tower. But that's not to say that we wouldn't look at other modular options in the future. I think everyone's seen that in the press. There's a lot of activity across the board of modular construction and activity as things on the sort of ESG front come more to the fore. So absolutely, yeah, no, I certainly wouldn't rule it out as something that we look at in the future.
For sure. Well, I think it's the future. I think similar to PropTech, whether it's right for right now or whether it's right in a year or 2 years, I think it's definitely the way forward in some element. But of course, traditional has been around for almost forever now, hasn't it? Really. So I think it's people can't expect it to change overnight.
No, I think what will probably happen, Jake, is probably a bit of a divergence between certain assets and style, maybe more suited to a modular process. Housing may be easier and faster to produce if it's in a modular format. Whereas obviously, I know there's a few examples of high-rise modular towers going up, in South London. Time will tell, how they stand the test of time. Too early to say at this stage.
For sure. I want to take you back, and I mean, it's more taking Apache back. I mean, John and Richard set up the firm in 2008. I mean, in terms of those two chaps individually day to day, what's it like working with them? Because I mean, I followed sort of John on LinkedIn for a while, hence sort of how I came into communication with yourselves. How is it working with those guys, and what have you learned from them as well?
Yeah, no, that's a good question. Well, Richard and I have known each other for just over 20 years. We were at university together, so we've known each other a long time. And obviously, John, I've worked with now for 6 years. I mean, no, it's great. They're both very, very driven individuals, and obviously took the decision, right in the eye of the storm of the recession in 2008 to set the business up, which very few people were doing at that time. But fundamentally, it's now starting to pay dividends as a business. But it's hard work for everybody concerned. All these large schemes, nothing ever happens in life easily, and property development and investment is much the same, Jake. You get in what you put out, so you get out what you put in with these things, and there are always challenges along the way, but fundamentally we've got a great team in the Apache business, and I think the fact that we've obviously got one of the largest regional schemes, pipelines rather, in terms of build to rent, what we've achieved in terms of selling market yields with our student schemes. We've just PC'd the first senior living scheme with Audley in Clapham, Nightingale Lane, of which we intend to grow the number of senior living schemes across the UK as well. It's a really exciting time to be part of the business.
For sure, definitely. I think you mentioned property development in the investment world is never easy. And I think I always say to people, there's a lot of money to make in property development, but there's also a lot of money to lose. And I think if you don't get it right, and you don't have the sharp team, you don't have the right culture within the business, then it's a risky business in many ways. But also, I think, like you said, having that sort of strong internal team and working with great leaders is, I guess, how you de-risk it for everyone involved.
It's also about everyone being experts in what they do and going through everything in a thorough process. So everything, all the technical due diligence that we go through and when we acquire sites, to the due diligence that we undertake on contractors, etc. You've got to follow duty to investors fundamentally, and track record is so key, because I think when the business was in the early years, you're almost only as good as your last deal, and you've got once you've got that track record, it is obviously a lot more it's a lot easier to raise capital, and equally, looking at what we've done in Angel Gardens, when you've got that product to show investors, to show prospective occupiers, to show other banks, to show the value, as it is, it is significantly easier when you've delivered something and you've shown that the lease up, and the rents can be achieved. It does make things a lot easier, but certainly, before you've got that track record, it's quite tough.
For sure. I mean, something on that, because track record, I guess, is something which, whether you're starting out like obviously Apache do, whether it's me or anyone else in the industry, you obviously are starting regardless of what you've done at a previous firm, you're essentially starting up as a new business. What, in terms of credibility wise, I mean, some of the things that I guess you would advise people on, because I guess in asset management, in sort of the property development space, when you are raising sort of 7, 8, 9 figure sums, it's people of this course got to trust you. They've got to know exactly who they're giving the money to. What sort of things would you say? I mean, if it was me, for example, or anyone else that would want to raise a lot of cash that needs some support, really.
Well, I think, obviously equity raising itself is a specialism. It's not something that I'm directly involved in. But I think, ultimately you've obviously got to be able to show that you can, deliver a product through the development phase and then operate it and then exit it successfully. So I think, the sales that we achieved on, as I said earlier, on Paul Street and Brunswick House, were fantastic, achievements for the team. What we collectively achieved, and there again, that is about adding to that track record that we've established over the last 10 years. So you've got to be able to show, you've got to be able to show that you can, hit the returns that you've underwritten off from the first instance. And obviously we've achieved that through the Middle Eastern family that backed the business initially. And then obviously our institutional investments, which have been reported in the press recently with Harrison Street and National Farmers Union NFU on the first platform of Build to Rent.
For sure, definitely. I think credibility, I mean, property development, I think it's over the last few years, especially, I mean, I operate quite a lot on sort of the build to sort of sell market. And I think developers that, I've tried to tell a few lies in many ways, said they could do so and actually couldn't. I mean, there's many developers have gone from doing a 2 up, 2 down all the way up to building 600 apartments. I'm just like, I mean, I always praise people for trying, but it's a case of, there's a lot of money at stake here. And like I said before, there's a lot of money to lose if you don't get it right. So, I mean, something that you mentioned as well, Jamie, is obviously CD on contractors. I mean, one of my questions was, obviously, with the size of deals that you guys look at, I mean, I guess selecting a key contractor is one of your most important professionals within the deal. What sort of processes do you have to go through that? Because I guess even with some of the top contractors, I mean, especially sort of around the north at the moment, there's been a few that have unfortunately gone out of business. What sort of processes do you have to put in place to make sure that you're getting the right contractor on board from day one?
That's another good question. I think, fundamentally, you've obviously got to undertake the due diligence on those parties, looking at their financial position, their track record, the individuals involved in the senior level of those businesses, but also, relationships and track record that they've delivered on other schemes previously. So, you make reference to, contractors in the Northwest. Obviously, you may know that Carillion were building our Angel Gardens scheme for us. And obviously they rather spectacularly went out of business. And, very fortunately, obviously as part of our Moda joint venture, Caddick Construction, who are part of the Moda business, have got their own construction arm, and we're able to move in very quickly and complete that project for us. But I think, fundamentally, obviously, that is a situation that you want to avoid at all costs. So it's really about, due diligence, going through, with a fine tooth comb to see exactly what the products are, the financial stability of those contractors, and then following through into the legal documentation to make sure that that's as watertight as possible to protect our investors. Because fundamentally, investors are the core of the business.
For sure. Yeah, no, a complete agreement. I mean, in terms of Angel Gardens itself, obviously you touched on Carillion, obviously an unfortunate situation for everyone involved in that. How was that? I mean, obviously when you first heard about Carillion going under in that way, what was your initial responses? I guess, how quickly was that from obviously finding out the news, obviously changing over to Caddick, who was it really they carried on the scheme throughout to PC?
That's correct. That's exactly what's happened. And I think, one of the core key things that was done before before the news broke on Carillion was obviously that, the Moda and Caddick teams in particular have got obviously close relationships with the key subcontractors. So effectively, when Carillion fell away, we were able to step into those shoes and pick up where Carillion went off. So we only lost a couple of weeks of actual downtime on site, and we were able to then pick up straight away with the concrete frame contractor. Very quickly, whereas I know that there are other schemes in the northwest that were, out of action for a longer period of time. So I think it was really a question of preparing for the worst and hoping for the best. And obviously, we were fortunate having the relationship with Caddick that we do have, that they were able to step in and complete the scheme for us, and as they have done.
For sure. No, it's nice to see. I guess it's yourself, Jamie. There's problems every single day in property development and I guess asset management as well. It's you've got to be there as strong as you can, ready to pounce on the problems. So you can't just sit there and take a step back. And these are the times, I guess, is what we get paid for, really, isn't it? It's what we get paid to do, is solve the problems that people can't solve themselves.
Exactly, Jake. It's very much property development is often about solving problems. But it comes back, as I said earlier, to having the core key team in place, both across Moda and Apache on the built to rent side of things.
For sure. I think, until the actual tenants have moved in, I guess it is just a constant problem solving exercise every day, isn't it, really? I guess there's a different set of problems that come when the tenants move in, of course, but it is just a constant problem solving exercise, and that team is so important, because if you don't, it's just, like I said, when you're dealing with large sums of money, it's those kind of decisions that can be made by people who aren't bought in the vision can have a big effect on the actual business itself. So in terms, obviously, with the market at the moment, Jamie, obviously with COVID, I guess, I personally believe we'll enter into an interesting period over the next 12, 18 months with, I guess, many businesses going unfortunately under, a lot of distressed assets available in the market. I mean, many will say, obviously, this is the best time, one of the best times ever to buy assets. Apache's take on that, of course, is it morally wrong to sort of say, yes, this is a great opportunity, because obviously everyone's, losing the assets or losing whatever it is. But what are your thoughts on that? And is it a case of you guys are ramping up, ready to come into the market, or are you a case of you sticking to what sticking with the project you've got and just carry on as normal?
Yeah, I think it's too early to see truly distressed assets, Jake, in the marketplace. I mean, I think there probably will be some distressed assets, whether that's in the retail space, or whether it's on traditional sort of over leveraged assets. We have a significant pipeline of sites. As I said earlier, we're on site at a number of schemes across the UK, so we've very much got plenty to be cracking on with at the moment in the development space. So we're not actively out looking at distressed assets at this stage. That's not to say that there might not be opportunities in the future that we would consider looking at, and there may be opportunities to repurpose retail space where there are schemes that occupy key locations within city centres, where there may be opportunities to bring build to rents into part or all of those schemes.
For sure, definitely. I think you definitely hit the nail on the head. I think it is too early right now to see where all the opportunities are. Who knows with what goes on in the next few months? I think it's it is uncertain. No one really knows the exact answer yet, do they? And I think we're definitely going to see at different points, I guess, markets going, whether that's retail first, whether that's another sector we don't know yet. So who knows? But it's I guess we've got to be ready to go when the opportunities do come about, because I guess they're not going to be on the market that long, are they? In terms of obviously we had a question from the audience. If someone wanted to sort of raise a lot of capital for the projects that they obviously wanted to do over the next coming years, obviously I know Apache started working with, was it Middle Eastern family offices, and obviously started bringing equity obviously from the overseas channels. What would your advice be on doing that, is to officially raise capital? Is it a case of you've got to know your numbers, you've got to be sharp as anything? Is it the relationships building? Is it the track record? What sort of key things would you want to see if you were, I guess, a family office that you'd want to see from a potential developer or funder, really?
Yeah, I think, in terms of the location of where you target raising capital, I think that ultimately depends on what products you're targeting building, because obviously there are certain nuances, within the Middle East, which very much suit the domiciliary in nature assets that Apache has developed over the last 10 years across student accommodation, healthcare, and now build to rent. So I think it depends on what you are looking to develop and invest in terms of where you look for that capital. But I think ultimately it comes down to, as I've said earlier, track record and demonstrating what you can deliver, and then actually delivering it. Because ultimately, if you promise something to an investor and you can then crystallise that in a disposal, then obviously that is the best thing that you can achieve.
For sure. I think it's the first people when I've gone to Hong Kong, Singapore, or Qatar, or wherever it is, the first thing people ask is, because I'm a younger chap in the industry, and obviously, and I understand why people want to ask, and it's the first thing people ask: what have you done? And unless you have a solid answer, unless you can show something, then that conversation will go one way or the other, won't it, really? So I think track record, credibility is everything. And I think that's what I've tried to build up over the last few years, as well as, like you said, the team that you build, work with. I think whether that's the relevant, the correct architects, or the right QS firm, or the right contractors, all these people, all these professionals play a big part in your development, I guess.
Yeah, no, of course it is. It's critical. You've got to have the right. It's not just about having the right joint venture partners. It's also about having the right team all the way through the process. You're absolutely right. You've got to have the right architects. You've got to have the right QSs. You've got to have the right project managers, because ultimately things can go right, or they can go wrong at various parts of the process. And we try wherever possible to work with repeat firms where that process has gone very well, because obviously everybody knows their own, that knows the personalities involved, know the processes, know the procedures. So we try wherever possible to work with repeat parties where the experience has been good.
For sure. Well, I'm sure the supply chain, anyone that's listening, whoever is listening from Apache, I'm sure that'd be great news to them. Jamie, I wanted to sort of round off the podcast. I really appreciate, obviously, your answers that you've given today, and that's definitely been informative for myself as well as the audience that will be listening. We always finish the podcast with traditionally a quote and a coffee. It can be a herbal tea if you drink tea, of course. But something that obviously, I guess, you sort of live by, sort of day-to-day, sort of preach, whether that's to anyone or you just keep internally with yourself, and also a coffee that if you were to go to Costa or you go to Starbucks, what would be your ideal coffee? What would those two things be?
Yeah, that's a great question, Jake. Well, I get mocked in the office for drinking too much coffee, so I have a latte. I actually have more than one latte, if I'm truthfully honest. So that's an easy one to the first question. To the second question, I guess fundamentally it's about hard work and building relationships. So if you put the work in, you get the rewards. Nothing in life comes easy, and that's as true in property development, investment, and asset management as anything.
For sure. Well, latte, I personally drink soya lattes, and they are amazing. So I drink, quite a lot of lattes myself, actually. But I try and have them around lunchtime, to be fair, because I have too much milk in the morning. It doesn't go so well with the stomach. But yeah, no, in terms of your quote as well, I think it's, like you said, it's with anything in life, you want to achieve great things, and you've got to work extremely hard. And I think over the last few years, property, it's all this working smart. And it's like, yeah, of course you've got to work smart, but the basic principles of working hard are always going to be there. And it's a case of, the way I see business and the way I see anything is, you're against the rest of the world in business. It's not a case of you're in the Premiership football and you're against 20 other teams. It's you're against everyone there is who's doing it exactly this in the world. I think you've got to be sharp. You've got to work with the right people. You've got to work extremely hard.
Exactly, and I think just to round off, I'm very fortunate. We've got a great team at Apache and at Moda, and with other joint venture partners. Feel very fortunate to work with the people I work with. But you're absolutely right. It is all about hard work and playing to your strengths.
For sure. Well, Jamie, you've been an absolute pleasure to have on. I'm sure when it all settles down, we'll get another episode done in London or whenever you're next in Manchester. But no, I appreciate everything that you've obviously mentioned, and looking forward to listening once we go through it.
Great, thanks, Jake. Likewise.
Cheers, Jamie.